Do you want your business to grow faster? Are you open to new and out-of-the-box ways to drive revenues and increase value? How do you imagine the most successful entrepreneurs and business leaders double, triple, or expand their businesses tenfold or more? The answer is deals. This is a weekly podcast featuring conversations with business owners, executives, and leaders as we reveal behind-the-scenes details that give you, our listeners, the confidence to pursue your own deal-driven growth. On this show, we discuss a huge variety of deals, everything from large, complex mergers and acquisitions, capital raising, joint ventures, strategic alliances, real estate, affiliate and sponsorship deals, franchising, and more. My name is Corey Kupfer, and I've been supporting deal-driven growth for businesses for over 35 years as a successful entrepreneur, professional negotiator, and attorney. My goal is to help you strategize, plan for, find, and complete deals that will help your company grow faster. Welcome to the Deal Quest podcast. Let's get started. Tom Dillon, CFA, is a seasoned financial strategist and the driving force behind Frac Finance. With years of experience as a fractional CFO, Tom specializes in helping small businesses unlock growth through data-driven financial management, cash flow optimization, and strategic investments. His mission is to demystify complex financial concepts, empowering entrepreneurs and executives to make confident, informed decisions that fuel long-term success. Tom, welcome to the podcast.
Happy to be here. That is a tremendous introduction. Thank you.
Well, listen, I'm excited to talk about what you do there. I'm excited to talk about your background and experience in, investment banking and PE-backed entities and venture capital and how you work with companies, now to help prepare them potentially for exit and other deals. But before we do any of that, I want to take you back to when you were a little kid growing up, maybe 10, 12 years old. What did you want to be? Because I'm guessing a fractional CFO, corporate finance, funded company guy was not it back then, but you tell me.
What do you mean? That's every kid's dream. There was a picture when I was a kid, I think it might have been first grade, that I drew, and it showed me playing tag with my best friend on the moon as astronauts. So there you go, astronaut.
I love it. It's funny. I mean, astronauts, obviously you're not alone as a kid wanting that, but it's so interesting. I'm not going to try to do it. I don't have the skills to do it, but I'm, very curious about the analysis of playing tag on the moon specifically, as opposed to just like being in a rocket ship.
I wish I could go back into that child's mind and just swim around for a bit, see what was going on there.
Exactly. One more question looking back. What was your first deal of any type? It could have been something when you were young, early in your career. You tell, whatever comes to mind that's a deal.
Yeah, that's an interesting one. I mean, I was involved in investing at 18 years old, started, even before then managing hypothetical portfolios, but that stuff isn't really that fun. If I fast forward it a bit to more that's relevant today, I would say an interesting deal was working on a project of Mike Evans, the co-founder of Grubhub, at his new company Fixer. They were looking to do a capital raise. I was at Kellogg at the time, and there was a lab that was called the Venture Lab, and all the kids back then all wanted to go work for venture capital. I mean, this is like the heyday of Uber. Everyone's wanting to get in and get an action of that. One of my good friends was the 25th employee at Uber, and so that was always kind of something on my mind that, hey, this world of finance is great, but this startup venture capital world is incredible. And so there was usually, I guess, is what I heard, was usually it was all venture capital, but occasionally there'd be an operating company. And, I had gone down the route of pontificating a lot of business decisions of other leaders and not really making too many of my own back in the days at the investment banking firm. And so the operations is really what intrigued me and wanting to run towards that. And so when they offered the opportunity to go work at more of a portfolio company on the ops side, I immediately threw up my hand. They were raising capital at the time. And, Mike could have sneezed and raised the amount of capital that he wanted. But I'd like to say there was some pushback and collaboration with him in the context of trying to figure out the assumptions of how much and what did that mean in terms of burn and the amount of equity that might be given up on a second, third round. So that was, I would say, one of the more meaningful first deals that I was involved with, which was just a tremendous experience. Learning by osmosis among that team was just incredible in and of itself.
I love it. I was going to go to your background, and I will, but you mentioned something that I want to hit on before I lose it, which is, because we get I get these questions all the time, whether it's from clients or whether it's from just entrepreneurs that I know, right? And, it's this question of, how do I know how much capital I should be raising on this first round, right? How do I value it? How do I whatever? And you had said something that's really important, right? Is, anticipating the next, round or two and where you're going to go. And, to some extent, there's sort of like, especially I've been doing this long enough where I'm not saying there's always been investment, in VCs, but obviously the VC world has become, a lot more sophisticated, and standardized is probably not the right word, but sort of there's models and ways and certain types of companies that come in at different stages, at different valuations. There's a lot more history, where things have become where there's a little more predictability. But at the same time, there is a thing where it is like, who knows, right? Or it's you're talking about pre-revenue and startup companies, whatever, yeah. So let's just spend a minute on that point about like how, in your experience in the past, like, and even currently, I don't know, you might be working with clients now, like, how do people, like, what goes into that decision on how you figure out the capital raising plan when you're at the point of your potential first raise?
Yeah, it's a great question. And, if we really wanted to bifurcate the market into, the pre-revenue kind of idea, or the pre-seed, even some seed where it's all just kind of fugazi, with the actual some traction and what that means. And so those are most of the clients that we would be ever dealing with are, they've already established some product market fit. They're going to raise a Series A. They really need to get serious about how much and what, terms and amounts, and, the valuation around that. And so it's not dissimilar to what an SMB would do. Now, there's a little bit more in terms of fast tracking or pulling forward the hiring. Like, you'll see the hiring just hockey stick up to the right. And so that changes, a little bit of how you think about the burn relative to, a smaller business, an SMB type business.
Yep.
And so the way in which we approach it tactically is really around the departments and trying to find the owners of those departments and figure out through conversation and a lot of kind of nudging and poking of figuring out what is really the heart of the matter and working with the data you have. So let's just say you're doing some testing, you have some micro traction metrics around what might be working in your marketing funnel. Fantastic. Let's extrapolate that and try to do our best we can with benchmark and ranges of industry knowledge and saying, hey, this is great, but this isn't going to last forever. We need to come back down to earth. Here's really where I think we'll settle in. And then being able to then reverse engineer what that really will look like in terms of the cash burn and understanding, hey, yeah, we can get here to our next raise in terms of valuation on the multiple. What is that going to take? And then doing that reverse engineering in terms of cash burn. So you'll look at the sales conversion funnel, you'll look at the marketing funnel, and you'll see the different levers within those funnels and look at the KPIs. And so really building it in the context of those department leaders that give you the best indication of where we are today and what do you think we can get to, grounded in the realities that are going to really come and face these extremely optimistic founding teams, which they have to be. I mean, if you're not just ridiculously optimistic and have the exuberance, you're best off not even starting.
Yeah. And that raises another question that, we often talk about with clients, is that balance between, like, when you're pitching for money, right? People want passionate founders, committed founders, people believe in their vision. And also, obviously, if you're talking about, VC level investors or whatever, they're looking for certain, returns and multiples on the returns at a high level, right? So, if you're going to grow incrementally, they're not going to be interested. But then there's always that balance of not over promising, because a lot of times, your deal terms and triggers, whether it's board, seats, whether it's, equity ratchets, whether it's rights to whatever, I mean, there's a million examples, are often tied into, what you promised. So it's an interesting balance, right? To be optimistic and excited and have returns that attract investment, but at the same time, don't lock you into something that's very unrealistic. I assume you've dealt with that as well.
Absolutely.
Yeah. So I guess, I mean, do you, being on that side of things with what you do, actually, how do you help folks balance that and make those decisions on where they should end up in terms of, if they're prepping their companies for investment?
Yeah, I think the best way to start is really thinking about the mindset of who you're taking capital from
Yeah.
and who you're a steward of you're a steward of that shareholder's capital. What does that mean? I've got a fiduciary responsibility now. And for a lot of VCs, they kind of look at things in terms of roulette table. And if you look at the math, they really need one of those to hit big.
Yes.
They need an IPO effectively, or a huge M&A event, which is, probably lesser if you look back into the track record of kind of where these exits have come from with finding these unicorns and being able to capitalize on those returns to make sense of the rest of the portfolio.
Yes.
If 90% of startups are failing or more, then you just, with the natural math of how it works out, they're not all going to work out. And so I think it really starts with a conversation of what are you hoping to get out of this? And should you be raising capital from these guys, or should you be looking at other capital sources?
Yeah.
And so I think a lot of it starts with the exit and thinking about, what do you really think the opportunity is here? And do you really, really need to raise? People who are raising from venture capital should be thinking in that exponential growth that we're going to the moon. We want to build to an IPO. And if you're not, and we'll hear a lot of founders and founding teams talk about, selling and having a liquidity event with an M&A. They happen. There's no doubt. You can look at the data and see every stage of a startup, and you can look at the exits, but they're not a ton as much as people think there probably are. And so I think, if you're starting to think about a smaller exit and this makes sense, then, maybe VC money doesn't make a ton of sense. And I'm sure I'll get some backlash from VCs saying this, but, they're not letting me in their portfolio. This guy's never coming in as the fractional CFO for my companies. That's fine. I'd rather speak, the truth about trying to help these founders think about ultimately help their LPs from the capital too, and how they might be thinking about stuff. So I think it really starts from there and the conversation around that, and companies that might be looking again for a smaller exit. And it seems to be a hot market with regards to M&A in their particular sector. There's a conversation there. Hey, do you really want to take this capital with these terms? To your point, Corey, that might not be as favorable. Maybe given the traction you currently have, there's some predictability around it. Maybe a different capital source makes sense here. So, that's really kind of the starting point based on my experiences that, I've seen play out that we really start at.
Yeah. Love that. And just for the audience to make a distinction that Tom's alluded to, overall, there are more M&A exits than there are IPO exits, right? Period. Right. But what he's saying, which is absolutely, which is the case, is that if you get VC funded, right, they're not looking generally for an M&A exit. They're looking for an IPO exit because obviously the public markets have a lot more, there's a lot more upside in terms of valuation and ability to leverage and have that unicorn, quote unquote status. So it's not just, it's interesting. I have conversations with a lot of entrepreneurs who, maybe they just hear of all their, whatever, their tech friends who are raising, whatever. And I'm like, you're not the kind of business, like, it's not the right kind of capital. You're not the kind of business, you're not committed to the growth, curve and levels or whatever, that VCs want. And your likely exit is not IPO. So yes, let's look at other ways, just, like you were saying. So let's just follow that through one more time. I keep thinking I'm going to get to your background, but we're in the substance and I don't want to leave it. So
my background's boring. I'd rather talk tactical that the audience.
No, we'll get there. I want people to know a little bit.
I appreciate it.
As anybody who's listened to any chunk of my 340 whatever episodes knows, I have no script for this. I start with people's bio. I ask them the opening question and then the conversation goes where we go. So that's where we're at. So yeah, let's talk about, so what are these alternatives? So, so some of the clients you work with who are not appropriate for that VC IPO track, what are the other options in terms of funding sources?
Yeah. So, there are different credit sources in terms of you can go private credit, say even SBA loan. that are out there. There's term loans, lines of credit. It just really depends on the opportunity.
Yep.
We've seen even, and now this is more established companies, not necessarily startups, but we've seen even sale leasebacks unlock capital instead of having to go and give up equity. So there's lots of different ways to say, here's our working capital in terms of running the day to day, and we need some growth capital. How can we get that and fund that? And taking on debt is a very serious endeavor, and equity too, no doubt. But debt can turn that company, upside down pretty quickly. And so when we go and we have that conversation and say, all right, you guys are going to take on some debt. What does this look like? It really then starts with the predictability around top of funnel leads, marketing. What is that? Where are these funnels at? How long in terms of our operating history have we actually been performing here? What do we look like? What does it look like in the context of industry performance, and then just kind of any secular trends around that? And then moving down into the sales conversion funnel too, and focusing on that aspect and making sure that there isn't one rainmaker. And if they leave, oh boy, company's in trouble. We don't know if we can replicate what, Rebecca did. She was quite incredible. We don't know how. She's just the rainmaker. That golden goose leaves, and people talk about customer concentration. What about sales concentration?
Yeah.
You never really hear that terminology, but inside those companies and ops, when I'm looking at them, it's certainly something that's top of mind. And so we go to that level of predictability before we would ever even suggest going down that debt. But let's say hypothetically they do, then we're looking at terms, we're looking at, where the typical interest rates are. Thankfully, we have a decent amount of, referral type partners that we would turn to that are trusted sources that we can absolutely rely on to, even if they're brokers out there that are looking for shopping best terms for what we might need, we're able to tap into that. Because for us, we look at our clients and we say, how can we service them? And it's not just, we're going to make sure the books are closed, and we're going to make sure that the forecast is updated at the end of the month. And we'll talk with the bank and we'll get the right files to them so we can get this loan. That's not really the full big picture. We're looking at it as, how can we be a resource to them, period. And within that, it's taking our experience across different clients and, over time, the building of that network for trusted resource base, basically. And so I'll stop there, but that's kind of the way that we think about it.
Awesome. And listen, there's so many ways. So many ways to get. Obviously, there's friends and family. There's strategic investors who aren't necessarily looking for exit. These are synergies, right? And some of these are appropriate in different industries. Some of these not. There's pre-sale, right, approaches where you get your capital in advance, right? So there's a lot of creative ways to fund, company initiatives that are not. Everybody hears about VC and PE money, right? But, there's a lot of ways that companies find ways to finance, not to mention those good little companies that just, grow with their own cash flow,
No.
What a concept.
That happens?
By what's sexy and what you hear, right? You wouldn't think of it, but, right? I know you'd be facetious like I am, but, it's amazing. Let's take a break from the show for a minute so I can tell you about an incredible resource my team and I have put together for you. Secrets of Deal-Driven Growth, Creative Ways to Grow Your Business Even in Challenging Times, is a powerful ebook that helps you take DealQuest podcast episodes and apply them to your own life and business. This is the ideal tool for anyone looking for creative ways to grow as deal makers, and you can get yours now. It's as easy as heading to coreycupfer.com/workbook and downloading your copy. While you're there, you can also consider joining our dynamic deal-driven community of founders, experts, small business owners, and entrepreneurs. Now back to the show. All right, so talk a little bit more about what you do now, even the stuff that's not specifically related to deals, so people can place it. And then I want to go back and talk about your journey to get here, because it's been through a number of deal-related, topics. But give people a little more. Obviously, people have a general idea what fractional CFO is, but talk specifically about what you do. And I know, listen, there's 10,000 fractional CEOs we could have on the podcast, but we don't have them on because if they don't have that background and experience in part of what they're doing, helping folks on the deal side, they're not appropriate for this podcast. But feel free to talk the whole scope of what you do, folks.
Okay. I'll try to keep this interesting as much as possible for you, Corey. But so everything really for me has been grounded in just being an entrepreneur, passing out flyers to shovel snow, mow lawns, that kind of thing. Right. And so there's that kind of itch that's always there. And you don't know when it's going to keep popping up in your life as you go through your career. But if you have that bug, you just got to know it's coming back to bite you.
Yep.
And so apologies to all you entrepreneurs out there that have that bug, because it's coming back to get you. And so I started my career at William Blair, the investment banking firm here in Chicago. I did that for, I don't know, 8 years. And it was an incredible experience. And during that time, I like to define that kind of period of my life as I was a pontificator. I pontificated about other business leaders' decisions on how they were operating their businesses.
Yes.
But as an entrepreneur, that bug, it wants you to be the operator. It wants you to build. And so I made the decision that I was going to go and pursue this entrepreneurial endeavor and this dream of ultimately ended up building Frac. But I did take a hard look in the mirror and realized I didn't have any ops jobs. And that's a problem. Being a pontificator, no ops jobs. So I said, all right, I'm going to go get some. So I ended up taking a job as a CFO at a private equity backed company and then was promoted to CEO. I did that for a little bit and he said, all right, now I know everything. I'm going to go out there and build, because that darn bug came back to bite me. And so during that time period, I wanted to kind of de-risk it as a financial guy. We're in our DNA. It's ingrained in us to de-risk, diversify, de-risk. And so I did go back and get an MBA. And during that time period, started kind of putting some of these ideas to practice, built a couple tiny companies along the way there. And that's at the end when I ran into the Fixer opportunity that really brought me into this world of, I guess, consulting, but it's more now what is deemed out in the market as fractional CFO work. And so I started really honing in on moving from pontificator, operator to now builder. And so I'm doing what I felt like I needed to do in terms of being an entrepreneur and having that kind of itch that needed to be scratched. And it's been incredible. We've met just tremendous individuals and business owners along the way. And what I kept coming across, and kind of to answer your question around how deals, like what does this fit in with deals?
Yeah.
Realize that for our companies, they needed to focus both on organic growth, but also inorganic growth. So growth through acquisition. And that's really, I think, where we differentiate ourselves. We understand the M&A cycle. We focus in on the life cycle of an SMB owner. So what does it look like to potentially buy a business? What does it look like to potentially sell that business? And we look at it full circle. So when you look at our services, we really look at it from the context of buying a business, growing a business, or selling a business. And if we're buying a business, it's going to be your quality of earnings, making sure there's no financial fraud of what you're buying. You're buying what they're telling you you're buying. And then on the growth side, that's where you have that fractional CFO and accounting services. And then finally, the selling is the M&A sell-side advisory. And a lot of times where we will come into the fold is there'd be a company or an accountant or tax person or wealth advisor who has a business owner that they're a client of. And ultimately, they realize that there might be a discrepancy here in terms of what they think the business is worth and the reality of what they can get for it. And so we'll do a valuation and understand, all right, here's really what the business is worth, because the multiple ranges change as you move up market in terms of your EBITDA. Let's call that your cash flow.
Yes.
A proxy for cash flow. And so they might read on Google or understand somewhere that there's these multiples they could get for their business in this industry, probably a lot higher, and are grounded in maybe public markets or the private equity markets.
Yes.
And so that's a tough conversation. It's hey, honey, we're not buying that villa in the south of France. We're going to be Airbnb-ing that thing. And that's not fun. But what is fun is devising the game plan of, well, all right, you thought it was 12, but maybe it's 2.5. How could we get there or close to it so that this is a little bit more palatable, given that you spend your whole life building this company?
Yeah.
And it was a real punch to the gut that your kids didn't want to take it over. Now we're planning. There's not someone maybe internally you trust with handing over the reins. And maybe there is, and there needs to be a plan in place for different opportunities for that type ESOP. And so then we'll reverse engineer exactly what I was talking about earlier with regards to some of these startups, similar in the SMB space. We're going to reverse engineer. All right, if this is the goal and this is our goal line, how do we get there? And marching down the field of who we're going to need, how much capital we're going to need, and then getting the departments to really buy into this plan of where we're going, making sure that everyone's on board culturally, because it's not just cash always. It could be culturally. Do we have the right people in the right seats? And so that's really where what we do, and kind of an example of where we would come in terms of thinking about a deal from the internal spot of getting out and selling to someone, but then also what that might look like in terms of getting to that goal and acquiring and having those M&A activities of buying out maybe a competitor or vertically integrating it, depending if that makes sense for the situation.
Yeah, I love that. And that background, I mean, and I love the fact that you were aware enough to go say, hey, I need to actually operate a company, right? And get that experience. And there's, it's funny because there's, similar to what some people say about the old saying, which I don't necessarily believe, but that those who can't do teach, right? They have a similar view sometimes on consultants, those who can't consult. And listen, like any other generalization, it's, true for some, not true for others. But the point is, like, the ones where it's at least a most legitimate of an argument are the ones who have never actually done what they're teaching and consulting on, right? And they still might have great insights and, in terms of what they've done or whatever. But certainly I always love somebody who's been there, done that, right? You were on the investment banking side. You were on the CFO, CEO side of a PE-backed company, and experienced those options in addition to obviously what you do. And that's, I'm sure that's super helpful. I mean, like, what are some of the things that you learned from those prior experiences that you bring into what you do now and valuable to your clients? That was a pretty broad question.
Yeah, no, that's an interesting one. I'd say one of the things that, we helped educate, this will go VC to start kind of capital raise as a startup. The founders didn't really have a great sense of the difference between common shares and preferred equity.
Yeah.
That ended up, it's a tough teaching moment when all they care about is getting this awesome idea up and off the ground, and they need the money to do it, to build it. And saying, just take a pause, breathe, and think about how much you're going to kick yourself if you don't get anything out of it. If you sell this and you're left with nothing.
Yeah.
Not saying that's the case, but it's something to consider in what you had mentioned earlier, Corey, around down rounds where you can get crushed down pretty quickly. And the cap table looks very different than what it did going into this particular round. And, those don't happen when things are going great. But the reality is, in startup world, there's going to be things that don't go great, and trying to prepare around that. And so for me, I think the learning lesson isn't just sitting here saying, oh, I'm sitting in the high tower telling people what they're going to be doing wrong. It was the reality of how much you need to pause and stress that to who you're advising, and making sure that there's an understanding around it. And I think early on, maybe the realization wasn't there enough, where it was like, oh, I said it, just check the box. Of course they get it. I told them. But no, like, did they really get it? And so that was a big learning lesson for me, is taking the time to like ingrain it and make sure that there's an understanding there.
Yeah.
And then I guess moving on to some of the M&A deals that I came into later. So this will be a kind of a story around a client that had bought companies and had a tech play. And they said, all right, we're going to buy these mom and pop operators. We're going to throw them on a tech play. And then we're going to go and drive performance. And I think the reality was that over time, the multiples expanded and as more strategic money moved into that space, there probably needed to be a more thoughtful strategic direction of not just we're going to buy a couple, but we need to plan for how we're going to gobble up more market share before it gets away from us. Given that we're a startup, we're undercapitalized, our competitors are overcapitalized. I came in late to that one, but it was something that it was one of those learning moments where you would think and pull from those experiences and say, next time we're going to do that differently, or we're going to think about that differently. And there's actually an opportunity. A new client that was onboarded last week brought in, one of our private equity new fractional CFOs, newer on the team, who was a perfect fit for this kind of M&A strategy. And so very excited about this opportunity and kind of pulling some of these learnings into that. And also then forming a board around what that looks like and trying to realize that I don't know. I know what I don't know. And I also know I'm not the smartest guy in the room. And that's a good thing. I think my parents and my 3 brothers beat that into me good. So I got them to thank. And so forming kind of a board around, hey, here's where we want to go. This is a big opportunity at hand. How can we get some strategic advisors in here to really guide us and, just say, hey, look, I don't know, but maybe this guy would be willing to guide us a bit more than anyone here at the table could. And so that's been a learning lesson too, is kind of thinking about who you can pull in. Not everyone's able to, or there's limited time, it's everyone's most sacred resource in their lives. And so trying to find ways to be respectful of that, but also add value to the client and be able to get them there. And so going into this, knowing that there's going to be probably a bunch of deals is super exciting. And again, saying, all right, what did I learn from the last ones, whether I was there from the beginning or not? And as we move into this much bigger opportunity, mistakes are magnified.
Yeah.
So let's pull some other strategic thought leaders into this project as we move forward. So that's kind of in terms of my learnings personally, as we've grown as a firm and how to support our team members, the things that we're thinking about now versus maybe 10 years ago, we weren't.
Yeah. Love that. Love that. So one of the things, when you work in the SMB space, I'm not going to assert that all big companies are totally logical and always make great decisions, but they do have systems in place that help that, right? They've got bigger executive teams with its other input. They've got boards they have to answer to, right? They probably have investors that they have more professional management around and budget for coaches and consultants and, advisors and whatever, right? In the SMB space, it's the personality, the characteristics, the limitations, of the founders or owners often come into play a lot more, at least there are fewer checks and balances around sometimes, right? So when working with clients, I'm always interested in the conversations of mindset and the conversations of dealing with humans, right? Because, we don't, even being a financial guy, right? Sure, you deal with spreadsheets and you do your, quality of earnings and stuff and whatever, but you're dealing with humans, right? So I want to talk a little bit about that because, I'm a big believer in anything that's limiting my success is really my own personal growth and inability to see or receive or limiting beliefs or whatever it is. And I'm sure in the SMB space, you deal with a lot, some of the stuff that happens in terms of whether they follow your advice or not, or whether, how quickly they grow or implement, comes down to less of the systems and great marketing, whatever, but there's at least a factor, let's put it that way. That is, who are the founders and and what is their sort of personal growth and what self-awareness and limitations and whatever. So tell me a little bit about whether you agree, disagree, and then 2, like, what are the characteristics of, if you agree, excuse me, what are the characteristics of the most successful founders, that you work with, from that point of view?
Yeah, I'll answer that first one or the last one first. So clearly open-mindedness, where they check their ego. It's not that they're not confident, but they'll check the ego at the door, knowing that there's smart people at the table and that they're paying these people in some capacity, one way or the other, cash or not, for that advice. So you might as well take the time to heed it at least a little bit or hear it. And then the other one is leaders that have an abundance mindset. And I know that's used a ton.
Yep.
What does that really mean? It means hiring ahead of growth, which is one of the most difficult things to do in business ever.
Yes.
It's so scary. And again, having that confidence around some of the KPIs and your predictability and that track record adds a ton of confidence around moving forward for that. Still scary, but it's less so if you have that ability. So leaders that have that, we try to do a really good job identifying who's not a fit early on in our funnel.
Yes.
Because you're 100% right. It is personalities. We're coming in, a lot of times we're a lot younger than our client. And so we need to understand that from the context of, you don't know what you're talking about. Tell me what experience you had. And so from that perspective, yeah, you really kind of have that personality. I wouldn't go as far as saying we're going to have the client take personality tests. We certainly do inside of our company for everyone that we bring on. It helps in terms of how we can best help them, period. And then how they can best understand themselves to help the clients. And so we're big on just knowing, hey, this is who I am. And we love it full-heartedly. There's nothing wrong with it, but this is who I am. This is what you're getting. Now, how can I best utilize that for the strengths? Yeah. And so that's our approach. Now, in terms of what happens when you do have a client who maybe you thought was not as beholden to some of their beliefs as you may have thought going into it, and you're already halfway down the pipeline and implementation time is here, no longer planning, that really then comes to the resources that we've built out over time in terms of our professional network, bringing in people who actually are the professionals at executing on something that needs to be done. Yeah. And so a lot of times it's that cultural issue that you're talking about, where I'm bringing the data and I'm like, come on, these are the numbers. They don't lie. We got the data. And I'm banging my head against the wall because it's not resonating. All right, let me try it this way. Let me try it that way. And you realize it doesn't matter how you present it. You're bringing the horse to water, but you're not going to force him to drink. So you have to take an entirely different approach. And so without having those resources, it can be difficult to execute just from a financial lens perspective. And you have to be very thoughtful and tactful about how you get there. And that only comes from experience and working with people that are very effective leaders in what they do. And so that's been kind of our saving grace of some trial and error, but mostly witnessing greatness from other people in terms of our resource network.
Love it. In terms of the clients you work with, are there any particular concentrations in terms of industries or geographies or any other, way to break them down?
Yeah. So we'll work with SaaS, e-commerce, and then financial services. When I say that, I mean fintech and then wealth management.
Yep.
And then we do kind of the sweaty startups. So a lot of the construction stuff that's hitting commercial real estate, anything that would touch those, even your personal home, plumbing, HVAC, electric, et cetera. And so that's kind of been our bread and butter. And then it really depends on too the bench that we're bringing in with regards to some of our team members. So there's a lot of team members that have CPG experience. There's another team member that has a lot of hospitality, entertainment experience. And so it just depends. And then, you have to kind of think about, hey, do we want to spend money towards targeting this particular client? How long is our team member going to be with us? Should we invest in here in this sector? It's not dissimilar to how a lot of the boutique investment banking firms are thinking about their growth into different sectors and subsectors.
Yeah. 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 And we definitely have a huge, as we spoke about in our pre-call, we have a lot of our listeners are in wealth management. We have represent hundreds of advisors, in that space and then in the financial space. So, it's definitely a chunk in our audience. And we have clients in SaaS and clients in, what you call them? The
Sweaty startups.
Sweaty startup. I love that. I love that. And, it's been interesting, and this is not a new trend. I mean, for the last 10 or 15 years, at least, you've seen much more professionalization, consolidation, aggregation, money, whatever, coming into the quote unquote sweaty startup space. Some very successfully, some maybe less so, but that's true with any kind of consolidation or roll up situation, Great. So last thing I'll ask you before I ask my final two questions, with everything you've seen, all the background you've had, any particular trends out there, whether it's in M&A capital raising, whether it's just entrepreneurial trends? I mean, obviously we got a lot going on with policies, not to get into politics one way or other, but there are various policies that are affecting some companies adversely and others, Listen, any kind of if you're an entrepreneur, you understand in any kind of changing situation or uncertain situation, there's actually challenges, but there's also opportunities, right? Wherever it's coming from, any particular thing you're seeing that's interesting trend-wise?
I would say from the perspective of the ETA community, so this is entrepreneurship through acquisition. So these are people who are buying most of the time their first business, and they're using that SBA loan that we talked about earlier. that market is really hot right now. And I would say your ability to become prepared and have a plan to approach owners that they're entrusting you to take over their baby, their business, to continue to run and grow it, has never been more paramount. And so it's something, I'm talking more about. I'm talking a little bit about that tomorrow. And so that's definitely a trend that we're seeing as this space continues to grow and get hotter. There's just more sophistication. And so you just need to come correct. That's the best way I can put it.
I love it. I love it. And listeners may remember, it's probably, I don't know, it's a while back. It's got to be at least a year ago. We had Richard Marks on, does a lot of SBA, focus on SBA lending for searches or for, ETA folks. A lot of those folks are either corporate refugees or they're coming in the military or things like that. And they want to become business owners. Some folks do that in the franchise world, right? We've had a bunch of franchise folks on and they do it through that. But if you don't want to be in a system, there's advantages and disadvantages. There are people, who become entrepreneurs. And then you're right. I mean, having the capital available, having, being able to really have professional help to put that together to help you evaluate the opportunity. Let's start there. And then also, to present yourself as a credible buyer. And then obviously to make it successful as you go forward. It's really important. And for me, that's an area that I love working with because I'm such a champion like you are of entrepreneurship, right? So when I see these people come out of whether, it's corporate or, whether it's big corporations, small, or the military, whatever, and they're like, I want to own my own business. I love those kind of folks, but some of them, but they need some help.
Absolutely. Yeah. I echo your sentiment. I love seeing that.
Awesome. So if people want to find out more, Tom, about, your firm, the services you provide, where should they go?
Tom Dillon, CFA on LinkedIn or www.frac, that's FRAK finance.com.
Awesome. Tom, my final question on the podcast is always about my highest value in life, which is freedom. And for me, that means everything from freedom from oppression for all people around the world to why I've been an entrepreneur for decades and haven't had a boss. What does freedom mean to you and how does it impact your life and business?
It's probably the best question. I'm not sure this answer is going to do it justice, but I think the financial freedom of entrepreneurship through me is really time spent with family.
Yeah.
And if you peel that back in terms of the freedom and the sacrifices people have made in order to, give you that platform to stand on and pursue it, I think is what freedom means to me. There's also sacrifice.
Yeah. Love it. Love it. Tom, thanks for being such a great guest on the DealQuest podcast.
I'm so happy I was here.
Thank you for joining me on this episode of DealQuest, where we help you understand how deal-driven growth can be your ticket to freedom. If you are interested in finding out more about my law firm, the services we provide to entrepreneurial and growing companies across industries all over the country, and my partner Brian Megan and I, and my amazing team, just head over to kupferlaw.com. That's kupferlaw.com. And if you want to follow more of my content, head over to my LinkedIn page where I post regularly. I'm Corey Kupfer. Until next week, wishing you the freedom and financial prosperity that I know your DealQuest will bring.